Okay, good morning. Thank you. This is a good turnout. Thank you for coming. Today, what we're going to do is we're going to start with some of those basic announcements like we do about the exam. So we're going to start with announcements. Then I'm going to show you, we're going to look at Angie's List real life statement of cash flows. Then we'll do 2 homework exercises that are related. Basically, we're going to do a statement of cash flows. Then we'll look at Apple's statement of cash flows. And then we'll do course evaluations. We'll get out in plenty of time. You'll have plenty of time. You'll still be done a little bit early. And anyways, so we'll get started. Final exam is Monday of finals week through Friday. It will automatically submit at 12:30 on Friday, so you need to start it plenty of time before then. If you start it at noon on Friday, you'll get a half hour to do it. So you can take it any time between Monday and Friday at 12:30, ending Friday at 12:30. If you're in Proctor, if you're in sections 5 or 6 where you take your exams on Proctor U, you'll want to make sure you schedule soon. Proctor U is swamped during finals week, so to get the best choice of times, the earlier you schedule your exam, the better, meaning call today if you haven't already, or schedule. I put on Monday, I said I was going to put the template for the operating section of the Statement of Cash Flows on Exam 3 reference sheet. It's on there now. If you go in Blackboard and look under Exam Info, you can grab that exam reference sheet. So it is done now. That's on there. Okay, what's due this week? We have Chapter 12 homework due. Chapter 12 homework, I think it's just 3 exercises. It's pretty straightforward, goes pretty quickly. We did 1 exercise on Monday. We'll do the 2 today, so it's not bad. So let's start with Angie's List. Angie's List has been in business, I think, something like 19 years. It's changed its form somewhat over the 19 years, and in 2013, it went public. So it did an IPO, an initial public offering. So it has stock that's publicly traded, so it has financial statements. So I downloaded their 10K this morning, and this is their statement of cash flows. Now, I couldn't put it all on one page because the minute I put the statement of cash flows on one page, nothing will be visible no matter where you are. So I broke it up into 3 sections. So the statement of cash flows has 3 kinds of activities on it. The first one is operating activities. And operating activities are the single biggest activity that you want to analyze on a statement of cash flows. Operating activities are answering that question about, is the company making money from its reason to be in business? Is it generating cash from its operations? So if we're evaluating the health of a company, whether it's an ongoing company, how healthy it is, when we look at the statement of cash flows, I want to see positive cash generated by operations. Operations is the biggie, the operating cash flows. So we look at Angie's List, and I've got this summarized on a slide where I put these numbers in really big, but in the far right column is 2012, and they had negative $33 million in their operating cash flows. That means their operations used over $33 million of cash, net use. So they did not generate any cash from operations in 2012. They actually used $33 million. So that wasn't a good year for them. In 2013, they generated $8.9 million of cash from operations. And then in 2014, $4.6 million. Okay, so just looking at that 1/3 of the statement, at least they're not using cash for operations. You would normally only see negative cash from operations in the early years of a startup, or if there's a crisis or something happens. But for a company to exist on an ongoing basis, to continue to exist, it's got to be generating cash from operations. Now, we don't know much. Let's look at the other section. So this is operating cash flows. Operating cash flows, that's the big number, but you have to look at it with respect to everything else that's going on. So next one is investing activities. Okay. Okay, let me stop for a minute. I'm going to answer that one. Okay, the question is, hey, what if the business is an investment bank, hedge fund management, or venture capital? Wouldn't that make financing investing more important? I would say no, because if the business is an investment bank, a hedge fund management, or venture capital firm, all of those activities are going to be in the operating section, okay? When we talk about investing and financing, if you're in the business to do that, that's your operations. And that's way beyond the scope of our class, but just know that those items end up in operations if that is your business. So it's, okay. So anyways, the next section of the statement of cash flows is the investing section. And the investing activities are generated by things that are going on with long-term assets. As a refresher, long-term assets are things like land, buildings, property, equipment, automobiles, trucks, long-term investments, like we've made an investment in another company and we have this long-term investment. So those are things that are in that investment section. Now, we look at this, and in 2012, Angie's List used $22 million of cash to invest, okay? So keep in mind, when they're using $22 million, they're investing in investments or they're investing in structure, you know, in buildings or in property. So they used $22 million in 2012, they used about $22 million in 2013, and $41 million in 2014. So to see what they did is, if you scan the line, I'm just looking, property, equipment, and software used $16 million, capitalized website and software development costs used $20 million. So Angie's List is using cash to build its website, to build its internet operations, and to buy property and to buy some investments. That's all very normal. You would want to see a company that's growing using cash for investment purposes. So that's very, very normal to see negative cash use for investing. Investing means we're investing in ourselves. This is long-term assets. So this is our infrastructure. This is Angie's List website, their internet their structure on the internet, and any buildings or things they have like that. So that seems normal. Okay, and then the third section is the financing section. The third section, the financing section, this has to do on the balance sheet with the long-term liabilities. So it's things like bonds payable. We issue bonds so we get money. This is our equity section of the balance sheet. So this is, we issue stock, or we buy our stock back from the market, whatever the case may be. So here we see that Angie's List every single year got cash from financing or equity. And we look at the most recent year, and the big thing, they issued long-term debt for $60 million. So Angie's List generated $60 million from issuing debt. So on this next page, what I've done is I've taken the totals of each of those. So operating cash flows on the first row, Angie's List is generating positive cash flows finally. So that's a good thing, but there's a caveat with it. Investing outflows, and that's normal because Angie's List is using money to invest in itself to grow, and that's very normal. Third one now, though, look at where they got most of their cash. It was from financing in 2014. They got a lot more cash from financing than they did operating, and that's dangerous. Angie's List is, a lot of investors expect it to struggle. One of the primary reasons they're expecting Angie's List to struggle is they have a couple big competitors moving into their space. One of those big competitors is Amazon. So Amazon recently started something, I think it's called Amazon Home Services, but it's where you can go on Amazon and find service providers. And I saw this, I signed into Amazon one day recently, and It's announcing Amazon Home, and the very first thing was you could rent goats to graze your yard, which I just thought was interesting. Like, why would they serve up goat grazing to me? But anyways, but you can go on Amazon now and find service providers for carpentry, for handyman, that kind of stuff. And so now Amazon is getting into the Angie's List space, because Amazon's, you can search, find service providers. Amazon will give you ratings. You can see how many stars the service providers have, look at reviews. So Amazon is all of a sudden crowding into Angie's space. So that's kind of alarming. Google's doing something similar. So Angie's List is going to struggle, and it hasn't done spectacularly on its own anyway. The first time that Angie's List has shown a profit in 19 years was the last quarter of 2014. Okay, so it had investors for 18 years. Loss, loss, loss. That's a lot of losses, but it's been able to sell it. So they went public in 2013. Over the last year or two since it went public, the stock has dropped considerably. At one point, it was down 80% from where it was issued. So Angie's List is struggling. They recently announced that their CEO is stepping aside, and they're looking for a CEO who's an internet visionary, they say. So, and investors have reacted pretty favorably that they're bringing in someone else to put a new spin on Angie's List. Angie's List, coincidentally, after all this, announced earnings this morning, and they were expected to announce earnings per share of 0. Okay, so at least they didn't lose money. But I looked between classes because they announced earnings right before the market opened, and so they announced earnings, and they announced an earnings per share of 7 cents a share, which again doesn't sound like a lot, but it's not a loss. And I took a quick look because they release, when they do an earnings call and they release earnings, they have financial statements for the first quarter, and they actually have their biggest source of cash for the first quarter is operations. So it's not financing and it's not investing, which is good news for Angie's List. And before class, right before we start class, their stock was up. So investors are reacting favorably. But it's just fascinating what you can tell from a statement of cash flows, because on a statement of cash flows, that operating cash flows is what you want to look at, because that's going to be the single biggest thing to see. Are they able to generate cash from what they're in business to do? Okay, so, of the 3 types of business activities reported on a statement of cash flows, investing activities are the most important when evaluating a business. True or false? Okay, now look, we just talked about what the most important would be. Haley, do you want to suggest to the person that they call in on the phone number, maybe? Okay, now, of the 3 types of business, is investing the most important? I'm going to look over your shoulder just so I can see. Okay, pretty good. Okay, investing is not, operating is. We're not going to close the question for another minute or so you're not going to see it close, but operating is the most important. Investing is not. Operating is, we're going to have another question similar to this coming up a little bit later. Operating is the activity you want to spend the most time on. It's going to give you the biggest clue. Is the company generating cash because of the reason that they're in business to be? Okay. So again, I'm not going to close this now. To close in another minute or two. So if you haven't answered, you've got maybe another minute or so. I don't know exactly how long. Okay, so those 3 types of cash flows, again to review, operating cash flow. Operating has to do with revenues, and we say it's net income. But really, when we're looking at the indirect method of statement of cash flows, this is the current assets and current liabilities changes. Okay, investing cash flows are long-term assets, and financing cash flows are long-term liabilities and equity. Okay, so where on the balance sheet do those come from? Okay, so operating, investing, and financing, and that relates back to Monday. And then I just want to point out, Exhibit 12.2 shows you in terms of a balance sheet, current assets and current liabilities are operating, long-term assets are investing, and then long-term liabilities and stockholders' equity are financing. Somebody asked me in my first class this morning for some example of a current asset, so it's probably worthwhile to review. Current assets, examples of current assets. Remember, we're talking about current assets other than cash. Examples of current assets are accounts receivable, inventory, short-term marketable securities, if you have short-term marketable securities. So the biggies are accounts receivable and inventory. Those are current assets. Examples of long-term assets would be things like land, buildings, trucks, cars, equipment, long-term investments, when it specifically says long-term investment. And then over on the liability side, long-term liabilities typically going to be your long-term notes payable, going to be bonds payable. If you have a mortgage payable, that's usually that. And then stockholders' equity, all kinds of things in stockholders' equity, common stock, preferred stock, treasury stock, dividends. Those are all part of that financing cash flow. So we're going to do a couple practice ones coming up. But before I get there, again, Exhibit 12.2 in your text and page 670 in your textbook. And again, if you don't have the textbook available, you can download the slides that contain these on Blackboard. So those are good to have. And I've put the template for the operating cash flow section on the exam reference sheet, so you don't have to memorize everything on there. Okay, so we're going to try one of these from Monday. I've got a couple repeats from Monday. Went much better this morning in the early class, so I'm confident it'll go better now. Okay, so issuance of stock is reported on the statement of cash flows as what? Operating, investing, or financing. This is issuing our own stock, issuing common stock. Where is that going to belong? Okay, now when we determine which kind of activity it is, if common stock is a current asset or current liability, you would put it as operating. If common stock, our own common stock, is a long-term asset, it would be investing. If our own common stock is long-term liability or equity, stockholders' equity, it would be financing. So based on what you think stock is, pick one of those activities. Wow, 87% correct right now. Okay, so let me start by giving you some hints here. So not talking to the 87%, I'm talking to 13%. So when we talk about common stock, we issue our own common stock. When we have common stock, it absolutely cannot be an asset. We cannot own ourselves. We cannot issue stock and have that be an asset. Okay? So it's not an asset. So right there, when I told you that, it cannot be operating because it's not a current asset. It's not any kind of asset. And it can't be investing. We're going to close this question in about 10 seconds. You have about 10 seconds to get your answer in. And again, the answer is not operating and it's not investing. Are we about everyone in pretty much? Okay. Okay, so that's financing. Okay, because common stock is a equity account, stockholders' equity. Okay, let's try another one from Monday. Purchase of land. So land. Think about what kind of account land is. If land is a current asset, it would be operating or current liability. If land is a long-term asset, it would be investing. If land is a long-term liability or stockholders' equity, it would be financing. Okay. I see right now about 87% have it correct again. And a lot of people are concentrated on one other answer. When we talk about land, well, first of all, I'll tell you this. Land is an asset, okay? So, and I think the majority of the class is picking between operating and investing because that's where our assets are. Current assets are up in operating and long-term assets are down in investing, okay? So right now you know it has to be A or B. Now, is land current or long-term? The distinction between current and long-term is this item going to be used up or consumed within a year? Land has been around for thousands and thousands of years. So it, by definition, can't be, in most circumstances, can't be a current asset. So what you've got there is we're going to close this in 10 seconds. Land is most definitely a long-term asset. Okay. I guess I've got two more. Yep, two more. Okay, so two more right now before we do the homework problem. Okay, so this one should be pretty straightforward. The best gauge of a company's ability to produce ample cash to continue as a going concern is net cash provided by what? Operating, investing, financing, or analytical. Now, going concern. Let me define going concern for you. Going concern means this company is going to be operating long-term into the future. You can't see any signs that it's not going to be around. Going concern means the company's healthy, things are going fine, that you expect it to continue. Okay? So which cash flow is most important in analyzing that? Okay, so let's start at the bottom. Analytical activities. Is analytical activities even a section of the statement of cash flows? No. So your answer should not be D. You still have any D's? Okay. Well, okay, let's move up. So when we're talking about the best way to gauge a company, we said it at the beginning of class. When we're talking about the best way to gauge the health of a company when looking at its statement of cash flows, there is one activity, one type of activity that is more important, that overshadows the rest of them, and it's going to be the operating activities all the time. We're closing the question in 10 seconds, so get your answer in. Operating activities. You need to know that operating activities are the big one. They're the ones. We want to see, is the company generating cash from the reason it's in business to be in? If the company is not generating positive cash flow over the long run, it's not going to survive. If it keeps bleeding cash every period, eventually people are going to quit investing in it and people are going to quit loaning it. They won't be able to sell off anything else. They'll die. So you need to see healthy operating cash flows. Okay, and then next up, one more question. Now, this one is a computational one, and it's not bad at all. But let's walk through it. So in 2012, this company sold land for $150,000 cash. Okay, so sold land for $150,000 cash, purchased equipment for $30,000 cash, and issued bonds for $100,000 cash. Now, the net cash provided by investing activities is what? So, first thing, when you see the word net, that means like a total. And the reason it says net is because we can have to add some things and subtract some things. So that's the word net. That's what that means. Now, next thing to take note of here, and this is huge, okay? It's not asking for how much cash this impact is. It's asking for the net cash provided by investing activities. I'm proceeding to cross it off, so guess we'll quit doing that. So investing activities. So investing activities. So now we're back to what kind of activities are investing. Investing activities have to do with long-term assets. So start back up at the top. Sold land. Is land a long-term asset? Yes. So we want, make note of the 150,000. We're going to use that. Purchased equipment. Is equipment a long-term asset? Yes. So we want to make note. So we have the 150,000 and we have 30,000. Then issued bonds. Issuing bonds. Is that a long-term asset? No, it's a long-term liability, so it belongs in financing. So we have two cash flows. We have 150,000 and we have 30,000. Now we can't just add them together. We have to look at, now this is the next step we haven't looked at before. We have to look, is it using cash? Is cash going out or is cash coming in? So the first one, we sold land. So if we sold land, is cash going up or down? Up, right? We're getting the 150,000. So we can put a big old plus sign in front of the 150,000. The next one, we purchased equipment for 30,000. Is that increasing cash or decreasing cash? Decreasing because we spent it out. So we had 150,000 coming in, 30,000 going out. So the net cash has to be the difference between those two. Okay? So what we're going to see there is that 150,000 coming in, the 30,000 going out. We do not use the bonds because those are a long-term liability and are not part of investing. So we're going to close in about 10 seconds. And next up, what we're doing is we're going to do a statement of cash flows. Okay, so next up, what we're going to do is we're going to do short exercise 12.7 and short exercise 12.8. Over the course of these two exercises, we're doing a statement of cash flows. We're going to, in 12.7, we're going to do the statement part of the statement, the operating cash flows, and then in 12.8, we'll do investing and financing. So what we're going to use is the same data for both. So what we have here is a table of information, and we're told to prepare the operating activity section. So, and we're using the indirect method. The indirect method is the only method we're using in here, and we're going to have the template. So I'm going to assume as we do this, we've got the template beside us. I'll be your template. I'll tell you as we go if it's plus or minus, but that's where I'm getting whether we add or subtract something. At the top, it says they've assembled the following data for the year ended June 30th. Remember that the statement of cash flows is for a period of time. It's not just a date and time, it's a period of time. So, first thing, when we do a statement of cash flows, the first thing we do on looking at the template, the very first line on it is net income. Okay, so we go to look, and look, the first thing on our table says net income. That's great, except that net income has a question mark next to it. So we just have to do a little work to get to our net income. As a review, so this is a good review of prior chapters. Net income is revenues minus expenses, sales revenues minus expenses. So what we'll do here is we've got to compute our net income. So we are going to calculate net income, and what we're going to start with is we're going to find our revenue. And our revenue, sales revenue is $376,000, okay? And now we want to subtract expenses. So I'm just going through the table looking for expenses. I see cost of goods sold over there for $198,000. I see other operating expenses of $64,000. And then the last expense I see is depreciation expense. So I'm going through that table of data. Do not feel compelled to use every single number. You're not going to need it. So first thing we need to do is we need to calculate net income. I know that net income is first because I'm looking at the operating cash flows template, and the very first item on that is net income. Okay, so then I can calculate net income. Take the $376,000, subtract the cost of goods sold, subtract other operating expenses, and subtract depreciation expense. So my net income is $102,000. Okay, so I have my net income. Because I'm out of screen real estate, I'm going to have to leave this slide. But before I do, I'm going to circle the numbers I'm going to need. Now, how do I know what numbers I need? I'm looking at the template, and I see the template. The first thing on the template was net income. That's how I knew what I needed to do there. But then I'm going to have a series of adjustments. And the first adjustment is depreciation, add back depreciation expense. We've got adjustments for adding and subtracting changes in current assets and current liabilities. So as I go through the table, I'm just looking for things that I see on that template. So I'm going to select items, and I see net income, which we said was $102,000. So I've made a note of that. I also see increase in current assets other than cash, so it's telling me. I also see increase in current liabilities, and I see depreciation expense. And again, I take that template for the operating section of Statement of Cash Flows, and I'm just picking items off the table that are on that list. And you'll have that list on the exam, so it's not something you need to memorize. Okay, now I'm leaving this table behind, but the numbers that I'm going to use in the Statement of Cash Flows, I've just circled there. The net income that we just calculated, and then the other three numbers given. So I'm going to start by doing my statement. This is a partial statement, but I'm still going to start with the name of the company, the name of the statement, and the year ended. A Statement of Cash Flows is for a period of time. So we're going to start with cash flows from operating activities, net income. We calculated it. By the way, the calculation at the bottom is not part of the statement. I've included it here just for your reference. Okay, then we have adjustments to reconcile net income. So we have that heading, adjustments to reconcile. And the first item is always going to be depreciation expense. And the second item is increase in current assets other than cash. Okay. I'm going to see if I can draw something. I'm going to wait a minute, and then I'm going to talk about this. I'm not done talking about it. But for some reason, the subtotal lines didn't show up in my PowerPoint. So, okay, now this operating section starts with net income. So net income's off in the far right corner, right column. Now, someone in my first class today asked me why the adjustments were indented. They're indented just to make the statement easier to read so that all the numbers aren't in the far right column. So we're going to put all the adjustments kind of in the middle. We're going to sum them. So I'm going to take my 12,000, my minus 63, my 20,000, and that's how I'm getting the 30,900. Now, something to point out. The Statement of Cash Flows is a statement that you absolutely, positively need to pay attention to the plus or the minus of each number, because each number can be plus or minus for the most part. We start with net income. That's a positive because it's income. If it were a loss, it would have brackets around it. Depreciation expense is virtually always added. I can't remember a situation where it would be subtracted, but you would add it in. Now the next item down, notice that I'm subtracting 63,000. Why am I subtracting it? Because I looked on the operating section template, and increases in current assets other than cash are always subtracted. So I'm just taking the sign from the template. The template says to subtract it, so I did. Increase in current liabilities is added, and again, it's on the template. So I'm referring to the template. I don't need to memorize this, but I do need to take enough time to watch on the pluses and minuses, because you get one wrong, and your totals are going to be wrong as well. Okay, so I take the 12,000, subtract 63,000, add the 20,100, and that gives me the negative 30,900. So that's off in the far right column. So then my net cash provided by operating activities is 71,100, which is the 102,000 net income less that negative 30,900. So in terms of this company right here, it is generating cash from its operations, which is good. Unless you're in startup mode or there's some weird circumstance, you want to be able to generate cash from your operations. If you're not generating net cash from your operations, you're going to be in trouble in the long run. Okay, so that's the operating section of the statement of cash flows. We just broke this up into 2 exercises. So what we're going to do now is we're going to do exercise 12.8, which is the other 2 sections of the statement of cash flows. So actually 12.8 says do the whole statement. So we've just done, this is the first part of the statement of cash flows, and then we'll do the investing and then the financing and put it together. With the question about how do you get net income again, it's on the screen down below. Haley said it was revenues minus expenses, but the actual number, I don't know if I can even, yeah, it's not. For whatever reason, I can't circle anything today. Okay, whatever. But it's down below there, and that is the computation. Again, the computation is not part of the statement of cash flows. I just included it there for your reference. Okay, so we're going to go to 12.8 now. It's the same statement, the same set of data. So 12.8, we're back to our set of data that we had. And so the first part of this is just what we just did. This is exactly what we just did. So we have the cash provided by operating activities. So that's the first part of 12.8. Now we're going back to the table, and the table of data given in 12.8 with 12.7, and we're doing the investing activity section. So the investing activity section, I'm going to go through the table and look for anything to do with investing. Investing is long-term assets. Again, we're looking for anything in the table of long-term assets. I see purchase of equipment. Purchase of equipment. Equipment is a long-term asset. It's something that we use for more than a year. So current assets would be something that would be used up, gone, or whatever within a year. Purchase equipment, we're going to use it for more than a year. So it's a long-term asset. Now, purchase of equipment. Notice it's negative. Again, for investing and financing, every cash flow you have to ask yourself, is this using cash, which is negative, or is it bringing cash in, which is positive? So, and notice in the table, it doesn't tell us. It doesn't say minus or plus. You have to look at it. If I purchase equipment, I'm getting equipment, I'm spending cash. So cash is going to decrease. So that's why I have a negative there. Looking down at the table then for other long-term assets, I see proceeds from sale of land. Land is a long-term asset, and if I sell land, someone's giving me cash, so I am going, that is an increase to cash. So in this entire table, there were 2 investing activities, okay? So now I can total those. So what I'm going to do is, my subtotal lines are not showing. There's normally a line under the 28,000, and so we have the purchase of equipment for 37,000 negative, and then proceeds from sale of land are an increase, so we take minus 37,000 and add the 28,000 to it. There, okay. So minus 37,000 plus 28,000 gives me minus 9,000. Notice that my net cash is no longer net cash provided by, it's used by. And the reason it's used by is because we have a negative number. Net cash provided by means we got net cash, the subtotal there would be positive. Net cash used by means it's negative. So it's just terminology based on whether cash is coming in from this activity or cash is going out from this activity. So the statement, the big thing is being able to remember to look at each item to see if it's increasing cash or decreasing cash. So we've done the operating section. We just did the investing section. And now the third and final section is the financing section. So what we're going to do with the financing section is we're going to look through the table and identify everything that has to do with financing. Reminder, financing is long-term liabilities and stockholders' equity. So these are not in any particular order. These are just, I guess, random. I picked them out randomly, so they don't have a specific order. When you're in the financing section, anything can be in whatever order as long as you get all of them. Okay, so proceeds from the issuance of common stock. Common stock is an equity account, so it goes here. It's positive because we're issuing common stock. When we issue common stock, we're giving stock, we're getting cash. So cash is going up. Next up, we see payment of notes payable. Notes payable, typically short-term or long-term. This one is long-term in this exercise, so when you do the homework, it is long-term. And the reason I can make that leap is it tells me, right above here, it was talking about current liabilities in total. So it's not, trust me on this one, it's long-term notes payable. If I were writing this book, I would insert the word long-term note payable. I think that long-term would make it a little more clear, but that's what it is. Okay, so payment of note payable. What this is saying is that we paid off our note payable. So we went to our creditor and gave that person cash and paid off our note. So we gave away cash, so that means that this was a decrease in cash. Okay. And then next item, I find payment of dividends. Dividends impact stockholders' equity. Payment of dividends, I'm going to show it as a negative because if I pay dividends, I'm paying out cash. Cash is decreasing. And then there's one more stockholders' equity item in this table. Purchase of treasury stock. Treasury stock is our own stock that we're buying back. It's a contra stockholders equity account. So we're going out to the market, buying our own stock back. So that's a stockholders equity transaction. If I buy my own stock, I'm giving cash, so cash is decreasing. So that's why it's a negative here. Okay, so net cash used for financing is minus $27,400. I got the minus $27,400 by adding $24,000, subtracting $37,000, subtracting $6,400, and subtracting $8,000. So that's where I get that subtotal. Now again, we're putting together the entire statement. This is the bottom third. So you'll have it in your notes all together. So the next slide that I show you, it's the bird's eye view. So it's each of the three sections that we just worked on the next slide. Okay, so the next slide, this top section was our operating statement of cash, our operating section. We did that in 12-7. And then we did the investing activities, and then we did the financing activities. So it all works together. The totals are out in the far right column, but the total for the net cash provided by operating activities is $71,100. That's a positive. We have net cash used, a negative of $9,000 for investing, and negative $27,400 for financing. So those three numbers combined, added together, subtracted the ones that are negative, give us our net increase in cash at the bottom of $34,700. And then typically what you would see on a statement of cash flows is you would see the next line down would be the beginning cash balance, and you would add it and come up with the ending cash balance. So a statement of cash flows does a lot of cool things for you. It shows you where the company's using its cash and where it's getting from. Just looking at 1 year, this 1 year's company's cash flows, it's generating a lot of cash from operations, which is good. You want to generate cash from operations. It's using cash for investing activities. It's reinvesting in itself is what's happening there. And then the net cash used for financing, what it did there is it paid off notes payable, it paid dividends, it retired some of the stock. Those are all very good things to use cash for. So this company looks pretty healthy just looking at this 1 year that's presented. But the statement of cash flows is very, very useful from an investor standpoint to see what's going on. Because if you don't have cash, it's going to be a challenge. They also, the reason investors like the statement of cash flows is it's harder to fudge cash because cash can be proved. You have cash. All these accrual entries that we make, like estimating depreciation, estimating how much stuff is used up, estimating contingent liabilities, all that stuff, we have a certain amount of leeway. There is a big gray area there. Cash is a lot harder to misrepresent. So the statement of cash flows really is a nice tool for investors to use. Okay, so what we've got here is this bird's eye view of Apple's statement of cash flows. So, and I'm going to zero in on some numbers, but a few words about Apple first. Apple is the company in the world with the largest hoard of cash. Right now, Apple has something like $180 billion of cash. Okay, so, and to put that in perspective, Apple could pay every single American $556 with its hoard of cash. So Apple has an enormous amount of cash. Now, Apple is a global company, and Apple is issuing bonds in the United States. So Apple is borrowing cash. So that's really weird to think about when you think they have more cash than any other company. Microsoft is the company that has the second most cash, and if you divided Microsoft's cash by the number of Americans, they would only give you $316. Apple would give you $556. So there's a big difference between Apple's cash and everybody else's. But Apple is in the market borrowing money. Why would they want to borrow money? They want to borrow money because their cash is not in the U.S. Their cash is in Europe and China, wherever they are. So they've got cash all over the world. What happens if they bring that cash back to the U.S.? They have to pay tax on it. It's now subject to U.S. tax code, so they have to pay 34% tax on it. Apple's like, I think it's cheaper to go to the bond market and pay 1 or 2% interest rate than to pay 34% on the cash that I can't bring in from somewhere else. So that's why when you see Apple in the popular press, you'll hear that Apple is doing a bond offering. They're borrowing cash, even though they have the world's largest cash hoard. It's because of the tax code. So they're issuing bonds. So let's just look at Apple's cash, and I'll tell you right now that the far right column, I'm going to blow this up so you're not going to see the headings, but the far right column is 2012, 2013 is the middle, and the left column is 2014. So what we've got here is Apple's cash generated by operating activities in 2012 was, I'm leaving off all the zeros, 51 billion, I guess, 53 billion in 2013, and 59 billion in 2014. Apple is generating money hand over foot. Okay, they are from their operations. So that's good to see from Apple. Then we look down here, the cash used in investing activities. They used $48 million for investing activities in 2012. They used $33 million in 2013 and used $22 million in 2014. That's fine. What they're doing with that, when we look in 2014, they're buying a lot of marketable securities, and they're acquiring some structure. So that all looks fine. So they've got some they're using some of their cash for investment activities. And then down below, cash used in financing. they've got they're using cash every year for financing, and pretty much it looks like the last 2 years they're making some pretty major repurchases of their common stock. Repurchase of common stock, you see it in the popular press. It's called a stock buyback. They are buying their own stock. That's treasury stock. Why are they buying their own stock? Because they're trying to buoy up the price of their own stock. They're buying their stock. The current stockholders then, their stock becomes more and more valuable because there's fewer shares outstanding. So there's, Apple is doing 2 things with its money. Well, it's doing 2 things, period. It's borrowing money in bonds in the U.S., and it's using that money and some of the cash it has to buy back its own shares to make Apple stock even more attractive to investors. And so when we look at what's happening then with Apple, Apple is generating lots of positive cash from operations, and it's using that cash for investing and financing activities, and that seems very fine. Apple is very, very healthy from a cash flow standpoint, very different situation than for Angie's List. So it's just interesting what you can see from a statement of cash flows. Even though it's kind of painful when you go through to do it, it does show you so much when you look at a company's statement of cash flows. Where is their money coming from? You should be seeing money coming from operations for most companies. Okay, so next question. So now we've got a couple questions to do. The statement of cash flows will not report. Okay, so what I'm asking in this question is, of the list A, B, C, or D, which item is not on the statement of cash flows? I think we've done enough that you should be able to not recognize something on there. We haven't talked about something at all. Okay, so the statement of cash flows will not report. So let's just start at the bottom. Statement of cash flows, sources of cash in the current period. That is certainly on the statement of cash flows. The statement of cash flows is showing you where you got your cash, the sources of your cash. It's also showing you how cash was used in the current period. So it's showing you both of those. It's showing you at the bottom the change in the cash balance. It's showing you overall how did cash change. Did it go up or down in total for the year? So we're going to close this question in about 10 seconds. But the statement of cash flows, we know it shows the sources. We know it shows the uses. It shows the changes. Close the number. Okay, we're going to close in about 5 seconds, so your opportunity to answer is dwindling rapidly. Closing, closing, closing. Is it stumbling off? Okay, and of course it's that first one. It doesn't say anything about checks written. It doesn't, number of checks not written at the end of the current period. Number of checks not written, that's a fictitious number. We don't know what wasn't written. Okay, so next one. The statement of cash flows classifies cash receipts and payments as operating, non-operating, and financial activities. Here, I'm asking you, are the 3 types of cash flow activities on the statement of cash flows, those 3 sections, I'm asking you, true or false, are those 3 activities, operating, non-operating, and financial? Are those the 3 activities, the 3 sections? You can look at the statement of cash flows we just did for the 3 sections. Okay, the statement of cash flows classifies cash receipts and payments as operating, non-operating, and financial activities. Are those the 3 sections of the statement of cash flows that I've been talking about? Okay, so we've talked about it. Should be back back in your notes, are pretty much everybody answered? Okay. Okay. 10 more seconds. Just looking. Okay. Okay, no. Okay. And that, of course, is false. It's operating, investing, and financing. Okay, that brings us to the end of scheduled class. If you're online, class is over, and you're welcome to exit the classroom. You're online.